Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, coming to the stock market yesterday, the market had an unexpected fall. Of course, I did see some weakness, but did not expect such a big fall. The fall was led majorly by the top biggies in the market. So we could see Infosys, Reliance, TCS, and of course, HDFC Twins leading the fall. So HDFC Twins have been on the fall for last 2 days, but then I don't see any reason as such. But then probably the only reason probably I could find is yesterday the INR has kind of depreciated slightly. So which is not a great thing for IT stocks. I do understand that, but why HDFC Twins have been falling is a question mark. But again, looks like some play there because FIA buying continues, net buying continues. But of course, yesterday the FIAs have just bought for about 200 crores, which is too less. So compared to the buying like of these days, they have been buying for almost like 1,500 plus crores. So that was a small buying yesterday. But of course, we had the DIIs selling yesterday, and that is happening for quite some time now. But not a big sell, of course. So it looks like DIIs have been on a profit booking mode, and FIIs are still looking to buy stocks. But then what happened after Indian markets closed is something interesting to look at. So see, yesterday, if you see SDFC Twins, by end of the day kind of tried to recover a lot, and that exactly took the market up as well. But then along with that, if you look at the US market, so US market has been majorly underperforming, majorly because of one, the banks, and two, the debt ceiling issue. But it is the debt ceiling issue is not coming to there is a small disturbance going to happen, right? So the debt ceiling issue is not going to stop soon until, they've been postponing the decisions for a long time, but generally it has happened in the past also that the decision is taken at the last moment. Apologies for the disturbance, there is some sound. Okay, let me carry on. So that is something that's happening. So, debt ceiling issue is still not confirmed, but then people feel now that it has come to close to the end of the limit. So there should be some decision taken, and generally it is a positive decision. So people have probably unwound all their short positions. So basically because of that, we could see US markets actually rallying up yesterday, major short unwinding, I would say. Does not mean that US markets are going to recover from here, but just that people want to stay away from the shorts because the markets can have a big rally if debt ceiling is kind of confirmed. But then one thing very important here is that the US market has already recovered yesterday so much. So will that actually bring a big rally again once the debt ceiling issue is solved is a big question mark. But for now, if you see, as the US markets continue to cripple due to debt ceiling issue, Indian markets always continue to rally upward. So now that the US markets are rallied up so much, there is not so much positivity in the SGX Nifty. So SGX Nifty is just indicating a small gap up around 50 to 60 points. That is probably we might see opening close to 18,250 to 300 range. So that will be the opening, but then having such a big gap up is also not a great thing. We might see some sell-off, but then after that, what will happen is very big question. Because today, during the market hours, we have SBI and ITC coming out with the results. Post-market hours, we also have Indigo coming out with the results. Of course, Indigo may not make big changes to the Nifty, but then SBI and ITC, both the results coming during the market hours is a jittery thing because expecting both the companies to do well and reports to be coming good, but then if at all there are some changes, there could be a big move in the market. So those things are to be considered. So if at all SBI results come and then it's very good, then there are chances it can take up the entire bank Nifty with it, and that will take the Nifty also along. So these are few things to be taken care of. So markets are going to be really volatile today. So I would actually kind of stay away from the market at this kind of time. Of course, I've got some positions which I'm kind of going to square off. I'm talking about traders again. So I will be squaring off as the market opens with some decent profit. But for the stocks, I would say it's a good opportunity. 2 days of correction was really good. I would say if you have not added good stocks, it's time to add. So it's time you actually invest and continue to make money in the stock market. So that's it for now. I think I've covered it all. So Indigo, of course, Indigo results are also going to come after market hours, which is expected to be good. But then, the next quarter, how would it be is something a big question. Will there be a growth? See, this quarter has seen a good growth because of the markets were seeing a lot of flyers outside, and of course, if you look at the aviation stocks. SpiceJet is in trouble, so you can't invest there. So where else do you invest? The only stock that you can see is Indigo. So Indigo has already been at its new 52-week high. So in that case, probably it's time to book some partial profit there. So that's something I would be looking to do today. So that's it for now. This is Srikant Rajan signing off. Today, expiry day is going to be really volatile. Looking forward to a great day and closing the week for us. So that's it for now. Srikant Rajan signing off. Goodbye. Have a great day. And but before we leave, do remember to press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. Manzoor Ali Khan, I see your message from you. Will the market be positive or negative? Well, like I told you, it is going to be volatile. The market is today's expiry and two major results coming. So the market could actually turn positive and negative at any point of time. So if you're a trader, I would suggest to kind of stay away unless you're an expert in changing your view on the market as quickly as the market changes. Okay? Goodbye.